And it's my turn to introduce the next session. And the chair of this session is Amy Rose Goody. And all of you know her because she's done a great job of pulling this whole thing together. But what you don't know is how much time she actually spends in this ecosystem and how much she knows about and finds out because she interacts with all the companies, all the challenges we actually have. So I think she's going to be a great moderator for this one because she has some real life stories that she can probably ask people about. So I'll hand over to you, Amy Rose.
Thanks so much, Gordon. Look, I was excited about this particular session, which is why I jumped in really quickly before anyone else was able to nab it. I'm quite, I guess, curious, and I watch a lot of real crime investigative shows, and I'm always sort of entranced in those stories. So I wanted to introduce this session. It's Innovating Compliance in Crypto, Cross-Chain Crime and Other Emerging Risks. I am joined by Tung Lim from Elliptic, Angela Ang from TRM Labs, and Chengyi from Chainalysis. So let's get the ball rolling. If anyone has any questions, pop them into the Q&A. If we have any time, I will cover those. We've got about 35 minutes today. I'm really looking forward to what our panelists have to say. We'll start with the first question that I have. Look, I know that you've all worked together previously. You're all in different companies now, but you were previously working together. Where you were previously has left me. I'm sure you can chat about that in a moment. But you've all worked together for many years, right? So you all have a really good idea of that, and you're all located internationally. What are the international trends in crypto regulation, and what are regulators thinking about the scope of regulation? What are their expectations of regulated crypto businesses in a post-FTX world, I guess? I'll start with you, Tung. Oh, sorry, Angela.
Thanks, Amy Rose. And maybe I should just start off by introducing myself and then giving the rest of my panelists a chance to step in. Yeah, before we jump straight into the questions. Hi, everyone, really great to be here. My name is Angela. I'm a senior policy advisor with TRM Labs, which is a blockchain intelligence fintech. We're active in Australia, and great to join you guys for today's Security Summit. So prior to my current role, where I lead public policy and regulatory affairs for TRM Labs in Asia Pacific, I was actually with the Monetary Authority of Singapore, something I share with my fellow panelists. And I did a variety of roles. It is a very big organization. I was in a variety of roles, but most recently, I was in charge of licensing for payment services and crypto asset service providers in Singapore. So part of the pioneering team that was setting up the payments and digital asset regulatory regime back in 2020. And I also worked with a Singapore-based startup looking at central bank digital currency projects. Maybe I'll just kick it over to Tung Lee.
Thank you, Angela. Yeah, as I think Amy Rose mentioned, all three of us are actually originally from the Monetary Authority of Singapore, but I guess in different roles. So for myself, I'm Tung Lee, the Senior Policy Advisor for APAC at Elliptic, similar to TRM Labs. We're also active in Australia and, of course, Asia Pacific. So for me personally, my interest, at least in professional interest, has largely been with law enforcement issues. So, prior to Elliptic, I was actually with the Singapore Police Force as well as the Casino Regulatory Authority. So in terms of experience, I've largely been in policy work as well as any work related to enforcement issues and regulatory affairs across all the agencies I've been with. So now maybe I can hand it over to Chengyi.
Tung. And before we start, let me just thank Amy Rose and Blockchain Australia for hosting this event and for having all of us here. So I had APAC policy at Chainalysis. Not unlike TRM and Elliptic, Chainalysis is a blockchain data platform. We provide data, software, and services to governments, financial institutions, crypto players worldwide, including in Australia, of course. And we also parlay some of that data and analytics into research that we publish. So we do an annual geography of cryptocurrency report. And last month, we published the latest version of our annual crypto crime report, which is, again, why I'm happy and excited to be here. Prior to Chainalysis, my background in the Monetary Authority of Singapore is, like Angela, across several roles. So central banking, financial regulation, financial supervision, and also financial sector development. So all policy considerations that come to the fore in the digital asset space. So super happy to be here and really looking forward to this discussion.
Thanks, everyone. And I probably should have done that as a really good moderator and introduced you all, but I'm just super excited. We've already had a conversation previous to this, and I just really want to hear your thoughts. So yeah, over to you, Angela, on that international landscape.
Yeah, thanks, Amy Rose. What a topic for three former regulators to come together and discuss, but very timely as well. You know, crypto, there's never a boring day in crypto. Regulation is there. And, you know, I think just within the last few years, the landscape and the regulatory thinking has already evolved significantly. So when I, started the payment services crypto regulation regime at the MAS about 3 years ago, when we were setting up our regulatory regime, the primary concern really was money laundering, terrorism, financing risk, MLTF, and then to a certain extent, tech risk. But, just in the last 12 months alone, there have been a lot of events, to say the least, that have thrown up kind of additional risks for consideration, running the gamut from financial stability to contagion risk, corporate governance, and so on and so forth. But I think I just want to zero in on one particular risk. When we look at the regulatory agenda globally, and especially in Australia, I think it's very clear that of all the things that, 2022 has thrown at us, there is one risk in particular that is front of mind for most regulators, and that is consumer protection. Because last year, the events had a clear impact on retail investors. And, as a general trend, just taking aside everything that happened last year, we do also see the use of crypto in scams rising as well. In Australia, the ACCC has found out that it's gone up over 162% in a year to over 220 million Aussie dollars. And that's really just a reported number, which is about slightly over 10% based on ACC estimates of what is actually happening in the ecosystem. And the sad thing is that these scams can actually be really devastating for individuals, because especially if you're talking about pig butchering scams, where, basically the victims are emotionally invested and then they're also taken for everything that they have. I can see why it's front of mind for regulators. And, just last December, we saw the AFP arrest 4 people in Sydney who allegedly stole over $100 million through this kind of scam as part of a larger operation in US. So it's something that is affecting us globally, and also, definitely in Australia as well. So no surprise to me that the Albanese government has put this at the very top of their crypto reform agenda. And, a good portion of the recent token mapping consult was also dedicated to tackling this issue and thinking about, how do we engender good consumer outcomes. So, I just want to end on a positive note before I kick it over to Chengyi. I think there's really a lot we can do as an industry. And this is something that we covered in our consult response as well. There is really a lot we can do to tap into the blockchain to really help with the consumer protection agenda and fight frauds and scams. But I'll just leave some of this for the next question, where we delve into this and kick it over to Chengyi right now.
Thanks, Angela. So this is actually a really difficult question for 3 former regulators to answer, just because there's so much to talk about. How do we keep it within time, right? So firstly, fully agree with everything that Angela's just said. I think we know that digital asset regulation started from a fairly narrow base centered on AML, CFT, and that really is still a mainstay. I think here the regulatory trend that we're seeing is policy maturing and translating into implementation on the ground. So we're seeing the Financial Action Task Force quite intently monitoring implementation of Recommendation 15, planning to do another review of implementation by country authorities sometime first half next year. And that's going to put some pressure on country authorities to make progress on implementing AML rules. And of course, we're also seeing this at a national level. So we're seeing countries take steps to implement the travel rule where they haven't done so, for instance. Japan issued a consultation in February on operational aspects of the travel rule, treatment of unhosted wallets. So we're seeing that come to the fore. But like Angela said, the real trend that we're seeing over the past year is this growing focus on consumer protection, also prudential safeguards. And we really see this. We see this in the UK with its ongoing consult on crypto asset regulatory approaches. Within the region, in Singapore, with consultation proposals on business conduct that were issued last October. We're expecting a response sometime in the coming months. And of course, the token mapping consultation in Australia. And the questions that are being asked are really sort of well-established pillars of regulation in traditional financial regulatory space, but thus far haven't been so widely applied in digital assets. So besides consumer protection, which Angela has discussed, there's also things like prudential soundness. So is your business model financially resilient? Can it withstand sudden market and liquidity stress? If you issue a stable coin, how is it backed? What's the redemption time frame? And then, of course, business conduct. Are you exposed to conflicts of interest? How are you managing them? If you operate an exchange, do you also engage in proprietary trading? How do you ensure those functions are segregated? So I think for digital asset players, there's a couple of key takeaways here. And first, it's that as digital adoption increases, which of course is a good thing, there will be a growing regulatory focus on ensuring that consumers can transact safely on chain. And as Andrew's already mentioned, there's a broadening conception of what that safety means and what's expected of crypto asset players. And the second key takeaway, I suppose, is that 2023 is really a pivotal year for policymaking as policymakers shape their approaches to this sector. So this is really the time for players in the space to engage with the policy community to help shape a regulatory framework that's proportionate, outcome-focused, and fit for purpose. And given the regulatory developments, the ongoing, the upcoming consults in Australia, I think there's lots of opportunities for players in Australia to do that. So let me just hand this over to Tung now, who I'm sure has a lot more to share.
Thank you, Chengyi, and thank you, Angela. I think as both my previous panelists have mentioned, definitely the areas of risks that regulators are interested in have definitely expanded. And I think this is a reflection of maturity of the industry, as well as the maturity to a certain extent of regulators in understanding the issues involved. And I think just recently, because of all the incidents happening to banks in US, I think it was almost like an prescient move when last month the US banking regulators warned banks to be on guard for any liquidity risks from crypto related clients, because they're cautioning some of their deposits could prove volatile. I think this points to the entire ecosystem. I think regulators have mentioned many times that they want to take the same risk, same rules approach to the crypto regulation. And now they are really reflecting that in the kind of areas they're looking at, be it in terms of financial stability, stablecoin issuance, potential contingent risk to the broader financial system. And I think that is one of the aims for the recent token mapping exercise held by the Australian government, where they want to look, draw inspiration from the functional approach espoused by the bank for international settlements in the nature of crypto regulation, using the same principles and tools that apply to the regulation of traditional products. This of course ensures technology neutrality, consistency with existing policy, and yet allows innovation with appropriate oversight. But that said, one, I think, good thing and very nuanced approach for Australia is that they have recognized that there are many different types of tokens in the system, including what they call public token systems. And this is a recognition of some of the unique features for the blockchain, where certain tokens may be somewhat truly decentralized, similar to new corporate structures such as DAOs. So I think governments are also increasingly taking a step back to understand that perhaps certain risks may be dealt with certain rules, but the more important thing is that the regulatory outcome must remain consistent. And I think that is something very good for the industry to work on, to follow this principle of same risk, but same regulatory outcome that's increasingly espoused by more regulators in the world, such as the UK FCA in its recent consultations, as well, of course, Australia. I think we're running out of time for the first question, so let's hand it back to Amy Rose.
We're definitely not running out of time. We've got plenty of time for the next one. You guys are walking the talk when it comes to collaboration. No doubt you guys have a secret private chat where you talk about all these things. You go way back. But I want to talk about the greater need for international collaboration and cooperation. So at the moment, with scams and issues within the industry on the whole, there's the ACCC, you've got the AFP, you've got local police and just multiple different regulatory bodies that you probably engage with already. What are your thoughts on how authorities and the industry can combat illicit activity together and collaborate together on things like scams, money laundering, and etc.? I'll hand it over to you, Chengyi.
Thanks, Amy Rose. This is another topic that we could probably go on and on about for a long time. But I think it's clear that illicit activity is one of the biggest challenges confronting the crypto industry. At Chainalysis, we do a lot of research on this. Our data suggests that in 2022, illicit activity on-chain hit an all-time high, accounting for crypto flows of about $20.6 billion. And this was really driven by increases in sanctions-related activity, scams, and stolen funds. And I really want to touch on scams for a minute, because as Angela mentioned, this is really front and center for Australia. This was the largest form of crypto-based crime globally last year. And we can see from on-chain data that Australia was particularly badly hit relative to other jurisdictions by investment scams. So this is really a criminal phenomenon that is global, and it's constantly evolving. So pig butchering scams, as Angela mentioned, really, we've seen an uptick this year. Another trend is pump and dump tokens, which we've also done quite a lot of work on. But all this is to say that illicit activity is a significant and persistent and a global challenge. So the encouraging thing, I think, is that collectively industry and law enforcement are also getting better at combating such activity. So Santa Clara County in the US, for instance, has a task force called REACT, and that's really had some success in being able to quickly trace and recover funds in a number of pig butchering scams. And there are many other examples of successful law enforcement actions. But what do these positive examples tell us about how we can combat illicit activity? I think they tell us that we need an approach that is system-wide. And that means action at the individual level, at the business level, at the law enforcement level, as well as collaboration across the ecosystem. So we need individuals to know that they need to reach out to authorities for help, because time is of the essence when we're thinking about tracing funds. We also need businesses, crypto businesses, to have a robust compliance program to manage exposure to illicit funds. And at a law enforcement level, this is an area that we've done a lot of digging into. We think it's about equipping law enforcement to understand and disrupt the criminal networks, the interconnections that are behind individual, seemingly independent crimes. And again, to make another plug for blockchain analytics, there's a lot that we can find out from on-chain data about where these interconnections lie. And that allows for more targeted action. But then to come back to your point, Amy Rose, about collaboration, I think this is really critical. So public-private cross-border collaboration, particularly around information sharing, we think really needs to be the bedrock of any crime, anti-crime strategy. And there are a number of such structured intelligence sharing partnerships in traditional finance. We have the Fintel Alliance here in Australia, which I think is a great example, but we don't have as many such partnerships in the digital asset space. And that's something that we really need to work on if we want to build transparency here. Let me I know I've taken up a lot of time. Let me just kick this over to Tung Lee.
Thank you, Chengyi. Yeah, I definitely agree. I think coming from ex-law enforcement background, definitely information and intelligence sharing is very important between all the different stakeholders involved in the industry. So, for example, there's crypto businesses, the law enforcement agencies, and of course us as blockchain analytics firms, because blockchain analytics allows us to dwell into all the data that's available in the blockchain, because the blockchain is immutable and permanent, and then it's of course also very transparent. And that's where we can come in to fulfill roles in investor protection and to ensure that scammers do not get away. And I think from the law enforcement perspective, it is also very important for national state agencies to come up with their own plans to take strict enforcement actions to make sure that, for lack of a better word, or a very common adage, crime doesn't pay. So I think that is something that's very important. And even closer to home, in Singapore, the Singapore Police Force, through the Commercial Affairs Department, has set up the Anti-Scam Command Unit last year in 2022, which comprises both investigation resources as well as general education. Because, of course, education is also very important. And that's where I think the TradFi has been doing very well. They have educated their frontline officers to detect scams. And I think this is something where the crypto industry can definitely take a leaf out of the book of TradFi, which is to focus on building up a culture of compliance, and that will give assurance to not just regulators, law enforcement agencies, but also investors as well, or their consumers. Because basically crypto businesses need to enhance the traditional 3 lines of defense for effective risk management and governance. As I mentioned, front office staff, when we provide services to customers, they can detect potential red flags that indicates a scammer may be targeting one of their customers. 2 compliance officers that monitor business operations and risks, as well as, of course, internal audit staff that can look at the general operational systems as well as processes to ensure that anti-scam measures are implemented throughout the entire organization. And then again, harkening back to my earlier point about adherence to the same risk, same regulatory outcome approach, I think building this kind of proactive compliance culture can be seen as a competitive advantage by crypto businesses as well. And then I was also listening to the earlier panel about cybersecurity, and I definitely do agree with the panelists there that different systems and processes such as multi-factor authentication should definitely be some new technologies that should be used by crypto businesses in Australia as well as other countries to ensure that security on the crypto ecosystem is there, and then thereby protecting investors from scams, money laundering, and so on. So let me now hand it over to Angela.
Thanks, Tung. Yeah, I think one thing that we all agree on, being in the space of blockchain analytics, is the power of data. And nowhere is this more topical than in crypto, in the blockchain, right? Because it is transparent, it's immutable, and there's really a wealth of information available. So I would just want to add one point to what my fellow panelists have already mentioned, and that is that I think this information can not only be used to trace criminal activity, to help law enforcement, which is really very, very important and critical work. But the same information can also be used to help prevent some of this illicit activity. And that's where the theme of collaboration with the industry coming together, information sharing is very, very topical, where we can really come together to make the information available to each other and also to the end consumers. That's really important in really harnessing that power beyond the capabilities of one company. And here at TRM, we've really seen the fruits of this since we launched our collaborative scam reporting platform, Chainabuse. That was only last May, actually. And just a little bit of background on Chainabuse. It's a platform that provides free instant support to scam victims, and it's free to use. You can go right on chainabuse.com right now and take a look. Anyone can view, search, and file reports of frauds, scams, and you can also key in a blockchain address and check addresses, entities that you might be thinking of interacting with to understand whether these addresses are exposed to illicit activity. And I think the fact that we've had 350,000 reports filed in under a year really underscores for us the value of doing collaborative information sharing. And I've looked at some of these reports, and frankly, they're really heartbreaking because you see end victims reporting things like romance scams where they were reeled in by someone that they established a deeply personal relationship with, pig butchering scams where they were wiped out of all their savings. And personally, just to deviate a bit, this gives me a real sense of purpose in what we do here, which is to make crypto a safe and productive part of the broader economy. Yeah, but I mean, this is an example of how we can really harness the power of the blockchain, working together as an industry, and beyond making, so one part of it is, of course, making this information publicly available to anyone who needs it. But chain abuse is also partnering with law enforcement, with other VAS, to ensure that this information is used to help the victims and also prevent the scammers from acting again. So victims can, opt in, for example, for personalized support on their cases that we report. So it's not just, you send this information out into the open web and nobody gets back to you. But I think we also found it's very important to create that feedback loop. And right now we're able to offer this across 9 blockchains, and we're adding 4 more very soon. So this is, I think, one example of industry public-private partnership that's really powerful in terms of fighting illicit activity on the blockchain. But I would echo my fellow panelists in saying that national regulators and FIUs also have a role to play in terms of promoting the information sharing that we really see is so critical in the borderless crypto economy. So, for example, sharing typologies and red flags that they're seeing in the jurisdiction, and FATF is already doing a lot of good work in this area. One example is that recent report on ransomware. This really helps to provide a global picture for both the industry as well as the public sector.
Thanks so much, Angela. I think we're going to have to chat offline about this, because I do have a number of inquiries that come through, and I've never really been sure. I mean, we direct to the ACCC Lodger Scam report, and look, it's still, people are still wondering, where do they go to get a better understanding of the things they're going through with respect to some of these scams. So wonderful to hear that. I'm going to have to close. We've got 6 minutes left. But I want to hear, and this is what I wanted to hear from the very beginning, what are the emerging risks that you're seeing? And further to that, how do crypto businesses address these risks and meet their compliance obligations? And that's including to detect and prevent illicit scams. Now, I'll start with you, Tung.
Thank you, Amy Rose. Without doubt, I think one key emerging risk for crypto businesses is the growth of cross-chain crime and the fin crime risks that it brings. So in recent years, there has been an explosion of multiple assets and blockchains. Cross-chain services such as decentralized exchanges, coin swap services, and bridges are increasingly popular as they allow users to seamlessly transfer value across different assets and blockchains. However, this interconnected nature of crypto has also attracted criminals who are looking to abuse such cross-chain services for money laundering as well as illicit activities. So last June, the FATF identified the rapid growth of DeFi services and cross-chain activities, or what it calls chain hopping, as key emerging risks for virtual assets. And as Angela pointed out, just last week, in a report analyzing ransomware attacks, the FATF again pointed out that chain hopping is regularly used by ransomware criminals to launder ransom payments. So aside from cross-chain services, criminals are also abusing other technologies unique to the blockchain to launder their illicit proceeds. So for example, Samurai, a popular Bitcoin privacy wallet, allows users to add extra hops of history to their transactions through a technique known as Ricochet. So initially created to enhance privacy, Ricochet is now actually being used by criminals to bypass blockchain analytics tools that do not screen transactions beyond a certain number of hops. So these artificial hops created by Ricochet actually also increase deniability for criminals during investigations, because a hop could indicate a change in ownership. So for crypto businesses that rely on a hop-based approach or screening tools limited by hops, Ricochet and similar techniques could render their entire compliance program useless in identifying fin crime risks if exposure a mere 5 hops away, for example, cannot be detected. So it is therefore critical for, I think, crypto businesses to use blockchain analytics tools like Elliptic, which can screen and trace criminal activities through cross-chain services and regardless of the number of hops involved. This is because any effective compliance program starts with efficient screening that reduces false positives while providing comprehensive coverage. So this is quite similar to how a funnel works. Compliance officers must first be able to screen all transactions, regardless of hops, assets, and blockchains, quickly and accurately. Only then can they identify the truly suspicious activities for further review. So by employing the correct blockchain analytics tools, a crypto business will be able to fulfill its AML CFT obligations and mitigate regulatory risks due to fin crime exposure. I think most importantly, this also helps to create a more secure and safer crypto ecosystem for everyone. Thanks. Maybe I can hand it over now to Angela.
Thanks, Tung. I couldn't agree more about cross-chain risk. I think that's really very topical in the blockchain today. And even back when TRM was building, all the way back to our roots in 2018, we've always believed in building for blockchain ecosystem precisely because today crypto is not made out of one blockchain, but multiple blockchains. And I'm very happy to share that today we cover 27 of those blockchains, which actually add up to over 1 million digital assets. Yes, there are that many, and we are committed to growing these capabilities. And I think it's really important to kind of establish cross-chain, where based on our analysis, we saw that in terms of the hacks that are perpetrated cross-chain, especially on the bridges between the chains, it's about 11 times larger than the average non-cross-chain bridge hack. So this is really very topical for the industry today. The other kind of emerging risk that I wanted to touch on is ransomware, which Tung also mentioned. I think it's really very topical here in Australia, especially given the scale and frequency of attacks that we've seen just last year. Optus and Medibank hacks within a span of 3 weeks. Each of these hacks saw close to 10 million Aussies being compromised, and the alleged culprits actually making ransom demands. So I think we really cannot leave this topic without talking about ransomware. And TRM has taken a look at what do we see on chain as far as ransomware. We're seeing that it's becoming more technically sophisticated. There are even things like ransom as a service products. People, ransomware hackers are using multiple layers of extortion, and ransomware is even being used to impact national security. We're also seeing things like more big game hunting, where cyber criminals are targeting high-earning organizations in critical sectors to maximize their ransom profits. So I mean, there's really a lot going on, and with Minister Claire O'Neill having said that Australia's goal is to become the most cyber secure nation by 2030, there's really a lot of work that can be done here. And I'll touch on this both on the private and public sector front. So I think as an industry first, blockchain intelligence can really help to expose and disrupt the modus operandi of these ransomware hackers. One example was when TRM was recently able to trace activities of prominent ransomware syndicates like Conti and its successor Royal to Chipmixer. Everybody's talking about Chipmixer in crypto. It was a crypto mixer that was recently shut down by German and US authorities with support from Europol, where they seized actually about 65 billion Aussie dollars in crypto. So these are some of the things that we can learn from our on-chain analysis to really expose these hackers. And then on the public sector front, I think there are policy levers that governments can really use to disrupt and disincentivize ransomware, such as mandatory reporting of ransomware payments, which is being considered in Australia and also in Singapore. And again, the theme of information sharing. But we're running out of time, so just kick it over to Chengyi to round us off.
Thanks, Chengyi.
Thanks, Angela. Amy Rose, I know we're super short on time. I will try to keep this quick. So I think, honestly, in a space that's this dynamic, the risk landscape is always going to be changing. Chainalysis, we're constantly monitoring for emerging risks. Some of the ones that we're looking closely at, I think we've already kind of heard thematically come up today. So cross-chain. So what we found is DeFi protocol hacks accounted for about $3 billion stolen in 2022. That's a huge number. And of this 3 billion, almost 2/3 came from cross-chain bridges. And as Tung mentioned, bridges are super attractive target for hackers because they're essentially huge centralized repositories of funds backing the assets that have been bridged to the new chain. And any bridge that gets big enough, any potential weak spot is almost sure to be eventually found and exploited by bad actors. So that's something that we're really looking at. We're also monitoring a range of other risks. Ransomware is one, as Angela mentioned, money laundering. We're seeing a lot of creativity here, the emergence of underground money laundering services. These are a little less well-known and accessible than mixers, but they operate with brand names and custom infrastructure. And what we saw and what we detail in our crypto crime report is that we saw about $6 billion in value sent to such suspected money laundering as a services in 2022, and this is really up from the amounts that we saw in 2021. But to round us off, I just really wanted to make a few quick points. The first one is that even as we talk about crime, and there's a lot of crime, it's important to remember that illicit flows are still a very small part of total crypto transaction volumes. Chainalysis estimate is something in the ballpark of 0.24% in 2022 of total crypto transaction flows were linked to illicit activity. And even though this is, of course, a lower bound estimate that may be revised upwards over time, it's still a very small number. And the transparency of the public ledger offers us more opportunities than ever to identify, investigate, and really to disrupt this illicit activity. So I think just wanted to end off, I think, by rounding back to our first question and our first discussion. And that's that increasingly we're seeing this focus move from, battling illicit crime to what does a resilient crypto business look like? And that's a really broadening agenda that's going to be an issue, not just for compliance teams, even though we're talking about crypto compliance, it's really about building resilient business models. And yeah, so I think there's a lot of opportunity in this space for businesses to build. And I think we're all on board for the ride.